Jasbir Singh Gujral, Managing Director of Syrma, after a very good set of numbers, speaking to us on the numbers and the outlook ahead. I think, yes, let's go across to Mr. Gujral. Mr. Gujral, great having you. Thank you so much for taking the time out and being with us. And congratulations on what looked like a very strong quarter. It beat estimates as well. What led to this?
See, we had a weak quarter in the first quarter because of the negative turnover. Negative growth in turnover. This time the turnover has rebounded to 37% growth quarter on quarter. My exports have done very well. All my high margin verticals have shown a very robust growth of 20 to 30%. The railways and all that small base, they have grown even much higher. So overall, the strategy which we had started out to implement last year has paid off. And there has been a good increase in EBITDA margin, overall EBITDA, growth in PAT, PBT. So all numbers are good. And we're very confident that going forward, this will be sustained in the remaining half of the year also.
That's very good to hear, Mr. Gujral. So therefore, double-digit margins possible in the second half. Am I interpreting that right?
No, we had guided 8.5 to 9.
Yeah.
We sort of revisit our guidance to above 9. Yeah. Whether it is 9.4, 9.5. First half is 10%.
Yeah.
So typically the second half is better.
Yeah.
But I think we should be able to give north of 9% positively. So whether it's 9.4 or 9.5 or whatever, I think that we can wait for the next 6 months.
Oh, that's excellent, because the street will certainly take cognizance of the fact that you've come in considerably higher than the consensus estimates as well. 8.8% was what was projected for the second quarter. You've managed 10%. I do want to ask, and I'm pretty sure that we'll ask more about the operations, but I want to ask about this acquisition. You've made an acquisition of 60% stake in a company in the defense space. And 230 crore rupees is what you're going to spend now, and you're going to acquire the remainder of the 40% later. Our understanding is that this is only the tip of the iceberg. The opportunity that it provides is quite considerable. Can you give us some color on that? What is the revenue recognition like? What is the revenue potential?
See, as we had already shared, we were looking for inorganic growth in the defense sector because that sector was not in our portfolio. And Elcom is a very sort of reputed company, almost a 5-decade-old company, was set up in 78, and gives a cross-section of solutions cutting across surveillance, communication, telecom, and other verticals to the armed forces and paramilitary forces. It has a top line of about 200 crores last year. We expect it to grow marginally this year. But going forward in the next 2-3 years, I think with the Elcom management being with us and we being there, there is a potential of growing this portfolio by the base is small 200 crores. So by about 50-60% in the coming 2-3 years.
Sir, very good morning, Mr. Gujral. Tamanna here, and fantastic quarter. I see IT and railways as a segment has really fired. Is this a bump or sort of an anomaly, or are you seeing this continuing? What has happened with this particular segment? If you can just throw some light on that, because that obviously has boosted the numbers overall.
See, railways had a small base to a 50% growth, a marginal increase leads to a 50% growth. But we are very focused on railways, and with that sort of objective in mind, we have entered into a joint venture with Master of Italy. So I think in the coming year, and this joint venture will go on stream next year, Q1 of FY27. So I think next year I should see even a better performance in terms of absolute numbers in railways, which this year should be about 80 odd crores. Next year there is a potential of it going up to 170 to 200 crores or even more, including the joint venture company.
No, so what are the synergies that Master brings on board? In terms of, and how do you look at that railway segment pipeline because of this joint venture?
The Master is very strong in railway, high reliability electronics across Europe and other parts of the world.
Right.
And we would be manufacturing for them for the Indian market. And once we are servicing the Indian market, the confidence between the two partners goes up, and it opens doors for us to service the export market in years to come. I don't say it maybe in the year 26, 27, But further down the line, I get integrated to the supply chain of Master to service its global clients. So we have all the railway certifications. So it's an ideal fit that we give them cost-effective solutions in India for the Indian market and also make India as a base for servicing their global demand in the years to come.
Got it. Mr. Gujral, you've made several acquisitions slash partnerships in the recent past, and you've talked about the revenue potential of all of them. You've also got that ECMS update that you've talked about already. 3,800 crore rupees was FY25 revenue. If you put all of these things together, and you're saying that over the next 2 to 3 financial years, you'll see quite a bit evolving, where do you see FY28 or FY29 revenue?
I think FY28, we should be closer to $1 billion. FY28-29, we should be closer to $1 billion.
Stick to 30-35% growth, which means about 5,000 crores of revenue in FY26, right, sir?
FY26, we stick to about 30% of growth. But the orders which we have in hand, we have tied up some major, onboarded major global customers, which have a potential of giving us $100 million of revenue next year. There are 8 major customers, cutting across verticals, industrial, automotive, communication, power management. We have also signed what you call framework contracts with a couple of our existing global customers.
Got it, sir.
Which have a potential of giving 200, 250 million revenue over the next 2 to 3 years.
Lovely.
So based on this, we are very confident next year would be much better than this year in terms of all the parameters.
Wishing you all the best for that, Mr. Gujral, and looking forward to talk to you again very, very soon. Thank you so much for joining in.